Hey everybody, it's Dave Whitmarsh for the first session of the July 15th Rewards Recognition Employee Communication. Have a special guest today, Aaron Carr, who's the CEO of Qarrot Recognition. And hi, Aaron. Uh, Looking forward to seeing what Aaron has planned. Every time I've worked with him in the past, he's always had some really good detail, good insight, something a little different. And based off this session description, I think we're in for a bit of a treat. So thank you for participating today, Aaron, and thanks for leading off the event. And it's all yours.
Awesome. Thank you, David. Hi, everyone. It's a pleasure to present this webinar to you today. With a lot of organizations launching or considering employee recognition, it just felt timely to provide and discuss a ready-to-use framework for estimating program costs and benefits. In fact, we get those types of questions a lot at Qarrot. And so we've developed a tool, as you'll see, that can readily help you put together a business case. And that's precisely what we'll hope to cover today. So I put together a little agenda for us to cover so we can hopefully hit all of the interesting talking points. First, just a quick background on who we are so you know who we represent and what we do. We'll then cover some business case basics just to sort of set the stage. And then we'll look at the commonly accepted benefits of an employee recognition program so that we know what dials we're striving to move and measure as a result of the business case. And then we'll actually do a bit of a walkthrough of our business case template. So we'll roll up the sleeves, we'll dive in. It's a Google sheet. I'll try to cover it at a level that's not too in-depth so we don't bore anyone, but at the same time is deep enough so that you get the general gist of the tool and how to use it. Then, of course, we'll reserve some time for Q&A. And so as I go, I would encourage you to put any questions you have in the chat. That'll then let me come back when we get to the Q&A portion of the discussion to answer those questions to the best of my ability. And then finally, at the end, we've got some free resources that we can refer you to so you can either learn more about us or about how to set up or evaluate an employee recognition program. All right, with that said, let's jump in. So who are we? Clearly, we're in the employee recognition business. Simply put, Qarrot is an easy-to-use employee recognition platform. It's a cloud-based tool and generally used by organizations to celebrate employee achievements, i.e. recognizing good work, strengthening workplace culture, and improving performance. And we serve a pretty wide range of clients, from small teams, as few as, I think, 8 or 10, to multinational organizations with customer footprints in many countries. And as a platform, we have the ability to reward employees in over 40 countries. The last thing very quickly about Qarrot is it's really easy to set up and to use. And is a flexible tool that can be adjusted to just about any organizational size and any budget. All right, enough about us. Let's talk about business case basics. So here I'm not planning on getting into too much detail about what a business case is. I assume everyone participating today has at one time or another put together a business case for some project or another. But essentially, I just wanted to lay out the fact that when we say business case, we are meaning an assessment, a reasonable assessment of the economic benefits of a new initiative. So this is usually expressed as a return on investment, either an annual return on investment or perhaps a lifetime return on investment. And generally, when calculating a return on investment, you of course need to estimate the costs. What is the investment, whether at the outset or on an ongoing basis of this initiative? And what sort of revenues and or cost savings can we anticipate realistically as a result? You can then, of course, to calculate the ROI, subtract the costs from the revenues or the cost savings. That will give you a net benefit. And then, of course, you can divide that net benefit into the original investment in order to determine the actual return on investment. So again, didn't want to get into too much detail, as I think I'm preaching a little bit to the choir in that regard, but wanted to just sort of lay that out so that we all have a common understanding of what we are discussing here. And so in regards to the benefits of employee recognition, I'm not going to lay out the case so much as to all the different types of benefits that an organization might typically anticipate. I just want to focus on the core ones that are commonly discussed or commonly expected as the result of implementing a program. So at the end of the day, a recognition program is fundamentally about acknowledging and praising good work. The resulting feeling of appreciation has been shown to be critical to improving employee morale and productivity. And so those are two key areas of focus. Rather, productivity is a key area of focus for a business case. But beyond that, programs are increasingly used to foster a stronger workplace culture. That too is a contributor to productivity. But that can also, because that stronger workplace culture fosters a greater sense of meaning, togetherness, and often collaboration, it can also support improved employee retention. And so retention is the second element that we'll strive to measure. Finally, recognition programs that include rewards can also drive improved performance. And so to distinguish between productivity and performance, productivity is what you might expect sort of on a baseline set of conditions, whereas improved performance is to shoot for, let's say, short-term or longer-term targets above and beyond that baseline. And so whether that's motivating a sales team, a contact center, frontline retail staff, manufacturing floor staff, or others, again, a recognition program with rewards can be also tuned to focus on that third lever. So again, in summary, for the purposes of today's discussion, we'll focus on productivity as enhanced by an improved sense of appreciation and stronger morale, retention, largely as a result of improved culture, and performance as a result of having, let's say, rewards or incentives in place to achieve specific outcomes. All right. So now it's time for me to toggle over to the business case template. Bear with me 1 second while I exit this show and we look at the template itself. All right. All right. We should all be seeing the business case template, which is a Google Sheet. And again, this is a resource that I'll share at the end of the discussion. It's a free online template that we provide, as we often get requests from organizations who would like to put together an internal business case for a program. And so rather than repeating instructions as we've done in the past, we thought, let's build a template that organizations can use free of charge, go for it, and hopefully it helps you win the ability to implement your program. So just by means of a quick overview, I will be going through the 3 steps of showing you how we estimate the costs, benefits, and then calculate an ROI. I expect that to take about 20-25 minutes. But just before jumping in, I just want to explain that the way we've constructed the template is in fact in those 3 steps. First step, to look at structuring your inputs, so information about your organization that will be used to establish those costs and to also help calculate those benefits. And so when you look at the template itself, you'll see that there is a welcome page with some instructions, and we tell you that cells that are outlined in orange are cells where you can input your own company data. Now, if you don't have the data, or you simply would like to work with market averages, we have already input US market average data throughout the business case template, both to help illustrate how it works, but also so that you have access to some average figures from which you can start. Okay. All right. So first things first, step 1, we need to add some data about our organization. And so the first step is, as you can see, the employee data, the number of employees within the organization. That's a key input. The average salary per employee. Again, this is internal to you. We will not see this information. So because you'll make a copy of the template, I meant to say that at the start, and that template, that copy will be private and only viewable by you as a user of it. You will also then need to add the average annual revenue per employee, which is simply calculated as the total organizational revenues divided by the number of employees. Next, if you anticipate that as part of your program, you are focusing on retention and would like to include milestone or years of service awards as a mechanism for rewarding longevity with the company, then you'll need to have an estimate of the number of employees who are reaching a different years of service milestone on an annual basis. So here, I mean, I wouldn't worry about being overly precise. If you have a rough breakdown as to how many employees, for example, are coming up to 5 years or 10 years or 15 years, that's good enough, I think, to start. And if you do not intend for this specific years of service aspect to be a part of your program, then you can simply add zeros to each of these cells. Okay. So after employee data, you're going to need to incorporate or to answer some information about the cost of voluntary employee turnover. Sorry, I'm just going to refresh my page here. Bear with me 1 second. There we go. That's better. And so the data required to calculate voluntary employee turnover starts with your current churn rate. So again, here we have a US market average of 15%. Your organization may have a lower churn rate than that, a higher one. So again, best to use as the more specific data possible, but if you do not have access to that, you can certainly work with this US market average. You can then also add an estimate of the average number of days a position remains open. Why is that important to calculating the cost of voluntary turnover? Well, you have lost productivity during that period of time, and so the template will help calculate the impact of the lost revenues for that duration where there is where the position remains open. Next, average cost to post a position, a recruited employee. This is most commonly associated with the actual recruitment, whether you're paying a third-party firm or simply advertising on a jobs platform like Monster. And then you can add the number of hours spent interviewing candidates for the vacant position. This is maybe a little specific. If you prefer to just zero that out, you can. However, We wanted to reflect this because it incorporates the cost of both the human resource manager's time as well as the hiring manager's time into the equation. And then finally, the average number of days to onboard a new hire. So here, again, the assumption is that during the onboarding period, let's say that's a month, the employee is not at optimal productivity. Therefore, there is still that period of time when there is some vacancy technically in the position and there is lost productivity as a result. Okay. And so those are key inputs, again, that will help us help the template determine the cost of your voluntary employee turnover. It's going to produce a figure for you as soon as you input that data. Next is the cost of poor engagement. Now here, this is a little tougher because some firms conduct pulse surveys or engagement surveys on a regular basis. Others don't. We've incorporated a figure of 67%, meaning that this is the percentage of employees within the US that are either not engaged or who are actively disengaged. And this is a figure that comes from a large Gallup study that was done. So if you don't have access or you don't currently conduct your own form of engagement survey to provide you with an indicator of this data point, I would encourage you to work with this figure. It's probably representative. And then there is the cost of lost productivity or revenue per disengaged employee. So this also comes from a study, I believe, that was conducted by Gallup. In fact, the sources, and I apologize, I meant to mention this earlier, but the sources are listed here. We have links back to the original source articles where this data was obtained. So you have an immediate ability to see where we obtain the data and to read more detail about the source of each data point. With that said, the study indicated that for every $10,000 in salary, a disengaged employee generates about $3,400 in lost productivity / revenue loss. And so that calculation, this field calculates that based on your average revenue per employee. Okay. Finally, the last input section on this page is to calculate the gains, the revenue gains from improved performance. And so here, again, this is really more of if you do intend to use your program to not only boost productivity and improve retention, but also improve revenue generation, this is where these figures and these calculations would come in handy. Here, we simply focus on revenue generating employees. Whatever number that may be, you can enter, whether those are sales folks or contact center folks that have a revenue generation responsibility. You can then include the average number of sales per revenue generating employee per year. That's a baseline figure today above which you will hope to improve. The average value per sale, and then the average gross margin per sale. And so again, that gives you a baseline figure against which we will attempt to business case and improvement. Okay. So this is the heaviest lifting of the template, finding and inputting this input data. But once you have this, the next two sections are much lighter because the template now has the ability to baseline your current situation. And so the next step is to calculate the costs of your program. And so here, it does help if you have a basic understanding of the type of program you'd like to implement. And by that, I simply mean, will it simply be recognition-based? Will you include things like the years of service or other milestones, as I mentioned a few minutes ago? And will you also include the performance incentives, for example? So let's just assume you say yes to all three for the purposes of this discussion. You can then begin to fill out this section of the template. So the first section is to determine the investments that are going to drive improved employee retention and productivity. The first investment is if you're working with a vendor such as Qarrot, and many vendors in our space have a bit of a similar pricing model, not everyone, but there's some consistency. Most will charge a subscription fee for the use of the platform. And that is usually expressed on a per employee per month basis. Not always, but quite often that's the case. And so the first cost is to simply indicate the subscription cost per employee per month. I will note that this varies greatly depending on how large an organization you are, and whether you're making a long-term commitment or a short-term commitment. That's usually consistent across vendors as well, where the bigger organizations will benefit from greater volume discounts. And then the next step here is to budget for peer recognition per employee per month. What does that mean? So this simply means that if you'd like your employees to have a small budget that they can allocate, awards budget that they can allocate to recognize peers each month, then you can determine what that amount should be. Commonly, we see a budget of $10. There's no hard and fast rule behind that, but it's a very common figure that a lot of organizations use. And that simply means that each employee has up to $10 in value, usually awards points, that they can give to other employees in the form of recognitions every month. Next, you may want to include a budget for birthday awards. So again, if you do not anticipate including a birthday award as part of your program, put 0 in this cell. However, if you do intend to include it, then put a value in there for each birthday award that the software will assign to employees on the date of their birthday. Next, work anniversary awards, same thing. If you do not intend to award people on the anniversary of their start date every year, put a 0. But if you do wish to include an amount, then you can include one there. And then finally, again, this looks a bit bigger than it actually is, but this last part of the first section here is to simply allocate a value for each years of service milestone. So you may ask, well, what's the difference between the anniversary award and years of service? Do I need both? Should I use one, the other? Ultimately, that's a business decision. Most commonly, you will not use the anniversary award if you are already giving years of service, and vice versa. So it's usually one or the other. Not always though. Some clients do have both a recurring anniversary award that all employees receive, as well as specific years of service awards. And so if you are going to use years of service awards, then again, there you can input a value for each milestone award. And then finally, we allocate half an FTE to the management of your program. So we input that automatically on this line in the template. And you can 0 that out if you don't anticipate allocating a resource. Then the next and final step of this, final piece of the second step, again, comes back to the improving sales performance or revenue generation. And the only 2 inputs required here are the percentage of sales by revenue generating employees that is eligible for rewards. It's a mouthful, but effectively, you may not anticipate rewarding all sales. You may only anticipate rewarding a small percentage of sales, i.e. a percentage that is above and beyond the current, let's say, expected level of revenue generation per employee. And so you just need to express a rough percentage of the sales that will be eligible to be rewarded. And then next is the percentage of each eligible sale that is in fact paid out as rewards. So it's being expressed as a percentage, which is to say that if I make a sale worth $100, what percentage of that will I in effect earn back as a reward through this program? Now, the last step of our template is then to bring it all together, estimate the percentage improvement for each of the 3 levers that we've identified, and then to check out the return on investment that the sheet automatically calculates for us. And so, again, this page looks a little long, but there are only a few cells for you to enter. So it's actually a fairly, it's probably the quickest section of the template. The first section, again, is improving employee retention. And for the purposes of just creating an easier workflow, we've just repeated some of the information from earlier sections. So the current annual churn rate, the current annual cost of voluntary turnover. And then we're saying, what is the estimated percentage point improvement that you expect this program to bring? So if we expect to reduce 15% to 14%, then that's an improvement of 1 percentage point, okay? And that will then allow the template to calculate the resulting annual savings from improved employee retention, which in this case, with the fictitious organizational information we're working with, generates a hefty $342,000. And likewise, in the next section, improving employee engagement and productivity, here too, we're looking at, this calls back to some of the earlier information we reviewed, the percentage of employees that are unengaged. Again, we saw that from the first step 1, 67%, or whatever percentage you may input into your template. Then the current annual cost of poor employee engagement. Again, that's from the first section. And then what reduction or what improvement, i.e. what reduction or lowering of engagement do you anticipate as a result of this program? If we input 5 percentage points, that takes 67% down to 62%. Which is going to then result in an improved or annual savings from improved employee productivity of close to $300,000, again, for this fictitious organization. Okay. Finally, I'll just jump down to the third lever here, revenue generation. And here we have 2 cells that we can complete. So we just repeat information at the top of this section relating to the number of revenue generating employees, the number of sales per employee per year, the percentage of revenue generating employees improving their sales performance. So this is an estimate that you would need to provide for the business case template. Do you anticipate that all employees will improve their sales, or some portion thereof? In our experience, that would be probably between 25 and 50%. You may have a different data point from prior initiatives that you've run. We've got just a rough figure in here of 40%. And then you need to estimate the percentage increase in the number of sales for each of the employees that is making an improvement. So 40% improve, but how much do they improve by? In this case, we've put in a figure of 25%. And you can ask yourself, well, how many more deals does that represent? Is that realistic given the nature of our business and what we do? And then that will allow the template to calculate the improvement, which again, here is 437,000. And you'll notice for each of these 2 sections that the template is also calculating incremental costs. So it already calculated the baseline costs of your program, and now it's calculating the incremental costs for the improved behaviors. And it's proposing a total ROI at the bottom of the page. And so there too, you can very quickly glean after just entering the data what prospective return on investment you can expect on an annualized basis. Finally, I'm just going to quickly mention that you'll notice that next to many of these cells, there's a reference, M7, M8, 9, 10, 11. Those will link to our methodology page. So if anyone really wants to get into the details of each calculation, simply click on the link and that will take you to the methodology page, which will actually lay out the fullness of each calculation. All right. Well, I hope you've all survived that portion of the discussion. I hope that was reasonably useful. I did want to now open this up for a little Q&A. And I'm going to check out the chat. I don't know if there are any questions at the moment. If there are, don't hesitate to drop them in.
If you guys just mouse over, you'll see a chat button pop up, and feel free to put a question in, and you can be anonymous or use your name. You can also ask for information at a later date, but that's a good process. Thanks for running us through that, Aaron.
Yeah, my pleasure.
It's a good exercise, that's for sure. And so I don't see any chat, so we can certainly, let's see if we.
No problem. Well, the last section here was just to point everyone to some free resources. So specifically, if you are evaluating employee recognition, we do have 3 guides online available at our at Qarrot.com. Specifically, launching your first employee recognition program, rather a guide to. The next one is a 5-step buyer's guide for employee recognition software. And the third, of course, is the business case template, which we just reviewed. And so all of those are free for download and hopefully helpful for you should you be planning a program in the not too distant future.
Perfect. Thanks, Aaron. So Aaron did promise us this deck and information. So I'll have the recording done, and if you can follow up, Aaron, once I get that posted, and with the appropriate material. And if there's any questions or for you stragglers, feel free to get them in now. And if not, I imagine you'll probably get an email from Aaron with the deck fairly shortly.
Awesome.
Good.
Going once, going twice. All right.
Awesome. Thanks, everybody. Have yourself a wonderful day. Thank you, Aaron.
My pleasure. Take care, everyone.
Okay, bye now.